Well, Fitch Ratings Agency has revised its outlook on South Africa's credit rating to a BB-, moving the country from a negative to a stable outlook. It is hoped that the outlook will provide some relief as the nation grapples with economic damage that was worsened by the COVID-19 pandemic in an already ailing economy. Sifiso Skenjana is a chief economist and executive head and research at a strategic advisory at IQbusiness. He joins us now to talk about what this actually means for South Africa. Good to see you. Thanks very, very much for joining us, Sifiso.
Morning, Leanne. Yes, great to be on.
So what does it mean for us? I mean, so we hear about these credit ratings. What in sort of real terms does this mean?
Of course, besides that our sitting president, President Mabuza, is really delivering for the country. No, I think in earnest, it really, I think, becomes a signaling, or it's a signal to the world that our country is certainly not going to continue sliding, particularly on the back of the COVID-19 impact. If you remember, the last time the outlook on South Africa was downgraded was 31 March 2020, and really then anticipating the kind of impact that coronavirus would have on the economy, employment, and of course, its ability to repay its debt and all of those things. So I think they've had time to look at the economy, look at the country, look at our profile, and I think they are of the view now that we've probably turned the tide, and that we are certainly going to start looking at more positive economic growth, as well as then trying to reform the economy.
Gee, it's quite weird to say, you know, it looks like we may have turned the tide and things are looking so much better, because when you look at the average South African and the reality on the ground, it seems so far removed from some of the analysis. I mean, is this future looking as opposed to what's actually happening now? Because when you look at the average South African, they are struggling. We are struggling right now.
I think the story for South Africa has always been a story of uneven growth, where sometimes we see pockets of the economy that do flourish, while other pockets of the economy certainly are in a terrible state. And I think you're right, for the ordinary South African, I think things haven't gotten better. We've seen unemployment numbers, we've seen the level of poverty increasing, level of inequality as well increasing over this period. And of course, the whole digitalization that's been pushed by coronavirus also accelerates the digital divide as well. And so really starts to accelerate the gaps between the haves and have-nots. And so I think on the one side of the economy, I think there are structural fixes that we really need to lean in on and ensure that we bring the ordinary South African with us as we then position the economy for growth. I think on the other side, it's probably just a view on a number of things as well. Eskom seems to be stabilizing, and so the energy availability is a big factor in how these organizations look at South Africa, because of its impact it can have not only on households but of course on economic growth. And so we saw that Eskom came out, I think, with about 9 billion rand in terms of profit now for the first half of the year. And so it's things like those that I think are bringing confidence back into how these international investors are looking at the market. We've gone past elections as well, and so there's a lot more sense of certainty around where we're going, irrespective of the fact that we're in a coalitionary kind of space now more than we were before. And so I think it is, just the lens through which investors are looking at the country. I think in one way, there are positive sprouts and positive shoots, but I think you're absolutely correct that we really do need to continue leaning on particularly making sure that the ordinary South African comes along with us as we try to repair the economy.
You certainly do. And I mean, the reality of the situation is you look at an Eskom, and perhaps we talk to Eskom for a little bit, because we saw their results coming out, as you mentioned, and we're seeing, that they posted a 9 billion rand interim profit, but of course it still expects a full year loss. But again, when we translate this onto the delivery of power for South Africans and the reality that load shedding is with us for the long haul, and the fact that we are paying more and more and more and more for electricity and expecting a 20% increase when we begin next year. So again, it's one picture about creating, profits. It's a totally different picture for those on the receiving end. And again, I'm referring to South Africa. It just seems that there's such a disconnect between everything that is being reported and yet the experience is just not there. But let's talk to Eskom. I mean, is this a vote of confidence to the leadership of De Ruyter and his team? And do you think this will bring in more investment if we start seeing Eskom turning around?
Yeah, I think in many ways it can be looked at as a particular vote of confidence, particularly on the back of the fact that the country has had to continue funding Eskom, and so those monies that were budgeted towards Eskom, of course, were then not monies that were could be used for developmental imperatives for the country. And so I think on the one side, to start to see any positive sprout coming out of Eskom, I think is a good sign for the country. And it doesn't mean we're there yet. I think the issues at Eskom are very complex in terms of how then it translates into a view around profitability. They're going to continue expecting losses primarily around kind of how they've historically been funded and some of the projects that just never took off. And so I think they're going to continue carrying costs. They've got a big maintenance backlog, etc. And that translates exactly to the point that you're making, and that the ordinary South African again becomes left out. We know that Eskom's got a dual mandate. One is around driving the developmental and electrification imperatives for the country. And then the other, of course, is around helping organizations like high-intensive energy users in the industrial space, in the mining space, to help drive economic growth. And so on the one side, when we're looking at ordinary South Africans, we're seeing a lot more, of course, of communities that are being shut off. And so the electrification seems to be slowing down in the way, in context of how Eskom is delivering to those people. They're trying their absolute hardest to collect monies from municipalities as well. And we know municipalities make, on average, about 30% of their revenue from on sales of electricity. And so with all of the kind of regulatory developments now that some of the companies or people can self-generate up to 100 megawatts, I think those are some of the things that are also going to improve what we call the energy availability factor for Eskom. And hopefully then that improves also how households are able to be brought back onto the grid in the way right now that they're being excluded. So we really hope that the investment does come both in the self-generation as well as then looking at an improved financial profile for Eskom. It means when your financial profile improves, also your cost of servicing of debt improves. And so those are all the things I think that start to look positive. But you're absolutely right. The ordinary South African, again, is continuing to still be left behind, even when we are seeing some positive developments. But I think it is a step at a time right now, and we've got many fixes at Eskom. We've got to ensure that, where we are able to generate some value, let's continue to lean in on it and also celebrate some of the victories, because as I said, historically, money has been taken from our budget to help Eskom stay afloat, and now we don't have to anymore, and that means at least those monies can start to focus on other developmental projects.
All right, so let's just go back to the actual rating, and we see that Fitch did change the outlook from negative to stable, but it is still 3 levels below investment grade. So, this is still, we're still fighting our way back out of wherever we are, because it isn't a very nice situation. But it is, I suppose, a good sign of things to come. I mean, can we be optimistic looking forward? Because it's so unpredictable the times we're living in. I mean, we've still got COVID that we're looking, at the moment, we're still obviously on level 1. Nothing's changed as yet, but, there is this threat of a spread moving, and again, another lockdown, which, at the moment doesn't look like it's going to happen, but who knows? Things are so unpredictable at the moment, and we're seeing this playing out around the world as well. The unpredictability factor is massive. However, is this boding well just in terms of the future outlook for South Africa? There's a lot of recovery we need to do, and we know that.
Yeah, absolutely. I think on the one side, I think the message is that things aren't going to be as bad as we thought they would be for South Africa. So we're expecting them to be a little bit better than what we're expecting. And so I think that's the one thing is that at least there is a sense of confidence that is coming back into South Africa in terms of an investment destination. But also you start to see in terms of what we call long-term bonds in South Africa, and it's really the markets where we borrow money to continue funding the economy as well. is that those bond yields or the cost of borrowing has been steepening up over the last couple of months. And if you heard at the last budget that our cost, for every rand of revenue that we collect used to be about 21 cents used to go to debt servicing. And now it's about 26.4 cents for every 1 rand we collect goes to paying off debt. And so what that means is that investors are demanding more from us to be able to give us money. And so I think on the one side, the investors are still telling us that they're not happy around the investment profile of the economy. But in other instances as well, they're saying, but we are seeing improvements and we are going to watch until, as the improvements come. And then that's when, of course, your rating improves. And so I think some of the things that have historically been listed as big risks in the economy, one was economic growth, two was inequality and poverty, and the fiscal and the social risk that was embedded on that, and the other one was energy availability. So we're seeing some fixes coming from energy availability. We're seeing a little bit of recovery from an economic growth point of view, albeit from a low base. There's this massive elephant in the room around poverty reduction, structural reform to ensure that the Human Development Index in South Africa improves. And so, as I said, this is why I keep saying that South Africa is a picture of uneven growth where you see some positive sprouts of development, but some really, really concerning areas that really, I think, are continuing to be big pressure points. Unemployment is a massive, massive pressure point. We often talk about how South Africa creates jobs not for the labor force that it has, but for the labor force it wishes it had.
Yeah.
And so what does it mean for us to really understand the skills profile of our existing labor and ensure that our investment approach goes into the sectors that can absorb that kind of labor? And those are the kind of things I think that will help us increase our ratings over time. But I think one, as it stands right now, it's really that we've weathered a little bit of the storm, and they're not expecting any catastrophic events to continue impacting the economy negatively.
Well, we do. We hope so. I mean, obviously, there's what happened in July that we're still paying the price for as South Africans, the lockdowns of COVID. But also the fact that before we even saw any of these developments over the last couple of months or years that we're heading in, basically behind us now, the economy was still in a bad state. So we just have to make sure that going forward, and we've seen a lot, with, of course, the medical parole hearing now that's taken place for former President Jacob Zuma, there are again fears of uprisings and a lot of people quelling the fear, saying it's not going to happen again. We've learned our lesson. This is something that we will not and will ensure it doesn't happen. But these are those uncertainties that we worry about in the country, which we've seen happen, which can happen again. So is that again another factor that we must really, really be vigilant of?
Absolutely, Leanne. In fact, there's a whole body of literature that talks about where countries or economies have had a history of coups. You expect that the cycle will continue to happen. And the same thing happens when the country has a history of riots. It's something that continues to happen as a model of and the method of course, societal discourse. And so, dating back for South Africa, as far as 1925, really probably the largest in the kind of civic uprising from a worker's point of view and rioting was the Rand Revolt in 1925. And then it's pretty much carried on that way, that as a society, this is how we contest. When there's imbalance in whichever way it expresses itself. So I think on the one side, it is understanding that it's probably going to come again. And now it's then around how do you proactively engage the societal problems that exist, whether it is about political figures or whether it is more endemic around, inequality, poverty incidents, and all of those things. We've got to step forward. We've got to be proactive around it, to ensure that even when there is a little bit of a blowout, it's able to be controlled in smaller spaces as well, because you're more proactive in thinking about that it's probably coming again. And these are the factors that are probably big drivers. And so let's lean in on those factors. Let's be more communicative as well to South Africans around what are we doing to ensure that your lives look a little better feel a little bit better as well. And so those are some of the things that I think from a national leadership point of view, as well as corporate, as well as just social compacting as a country as well, and says these are the things that we want to bring forward to ensure that these are not the kind of insurrections that can really wreak havoc for our economy as well as our societies.
Yeah, job creation, job creation, job creation. That is really what we do need. I mean, you touched on unemployment, and I think you said it in such a nice way, just saying, what was it? You said a line, which really just, it stuck out to me. Creating jobs we wish we had or something, but this is the reality. And as I close this, I mean, this is brought on a conversation by Fitch. We'll take the good news and have it and bask in it, but we still have a long way to go. But in terms of job creation, going forward into the next year, this has got to be on the top of the agenda for anybody right now, is finding ways, and for the president and for big business, finding ways to get people into jobs. Because if that doesn't happen, we're on a course to, I don't know what. It's not looking good at all. But your advice in terms of what you've seen and how we do that job creation, where should we be looking?
Yeah, absolutely. It's a colossal task, but I think we can look at it in a number of ways. I think the short-term fixes as well as long-term fixes. I think from a short-term fix, we often talk about, let's look at sectors that have what we call a high velocity of employment. And so simply, it's a sector like tourism, for example. We know, more than 60% of the people that were employed in that sector were younger than the age of 34. So it's a sector we know that employs people, but also when, for example, a concert comes quickly and you can get people moving and doing stuff. And so, you're able to turn things around relatively quickly in that sector. And so let's look at sectors with high velocity. That's one of the sectors, tourism. We've also seen at least developments coming out of the DTIC in South Africa, really with the incentives that they've done for the business process outsourcing sector, which is really the call center industry in South Africa. That's been growing really well in terms of exporting, as well as a sector that is able to employ. I think 60% of the people employed in that sector are young Black women. So it is a sector that I think can definitely continue to support. I think big issue here is also around how do we ensure small businesses are able to participate sustainably in the country. And these are the businesses that actually do drive employment. South Africa, where we are right now, is many countries have been where we are. Vietnam in 1974 started here, but they started the reform in 1985 and they really started working. Now they're bigger than South Africa. Germany had a similar issue in the 60s as well, and look at where they are. Now you see that it is small businesses driving growth. So it is, I think, about really creating a conducive environment for small businesses, as well as finding these high velocity sectors. And then lastly, I think over the long run, we've got to bring business into the education curriculum, into the economic cluster. What we've seen in other countries, you're able to then align what skills businesses want with the skills that you're planning at an academic institution point of view. Let's bring those people together. Let's let them write the curriculum so that in essence, you're increasing the probability of these people being absorbed by these businesses when they finish.
All right, Sifiso, we leave it there. Thank you very much. Thanks for chatting to us. A wide-ranging topic of economic issues on this Friday morning. I know it's quite a lot for a Friday morning, especially if you're on holiday, but this is the reality. I mean, we did get that Fitch rating coming through, which was some good news. We'll take any good news we can get right now. But there's still a lot of work going forward, and just a look into the new year, what needs to be done to try and create those jobs with Sifiso Skenjana, Chief Economist and Executive Head and Research Strategic Advisory at IQbusiness. All right, let's get into our news now.